A week and a half ago, we learned that Evergrande would suspend interest payments on loans to two banks that were due today. We've also heard rumors that they'll suspend all payments on their wealth management products, like annuities. Oh, man. And though the chairman has promised to repay investors who held those products, this past weekend it offered to do so with discounted properties, like apartments, retail locations. Get this, parking spots. Last Monday, things took a very public turn for the worst when Evergrande's jilted customers descended upon the company's headquarters to protest. You're not allowed to protest in communist China. The next day, management issued a very downbeat assessment of its financial condition, and it looks like they're having trouble monetizing their side businesses. Last Thursday, Evergrande applied for a suspension in trading on its onshore bonds. Another sign that default could be likely. I think the only way out of this is a government bailout. But the same day, the editor-in-chief of Global Times, by the way, that's not like the New York Times, that's called a state-backed newspaper, said that Evergrande shouldn't expect a bailout just because they think they're too big to fail. Remember my thing, big fail. Meanwhile, Evergrande's stock has been obliterated, and that pain is spreading to the rest of the Chinese real estate industry, to the Chinese financial sector, and to foreign banks with lots of China exposure. That tends not to be U.S. banks, just so you know. What does it mean? Evergrande is definitely a systemic risk for China, but I don't think that will do much damage here. However, there are certainly some sectors that will get hit. If Chinese real estate collapses, that's bad news for the metals and mining complex. And witness the breakdown in Freeport-McMoRan, that's a giant copper company. Plus, if this causes a full-on recession in China, then U.S. businesses with lots of Chinese exposure could get hit. There, you're thinking about the Starbucks, Estee Lauder, a Nike, Caterpillar. Look, Tesla, even Apple. Don't flit in and out of it. It's not going to work, okay? I'm not worried about the U.S. banks. They've been pretty much shut out of the Chinese market anyway. We used to think that was a problem. Maybe they dodged a bullet. Cryptocurrencies also could collapse more than they have. And I've got more on that later, so you want to stay with me. But the bottom line, I don't think the Evergrande fiasco will do serious damage to the U.S. economy, even as there are some groups that could get hit. But it does give investors a great excuse to do some selling, and they're taking it. My view, just sit this one out, please. Then you can buy stocks with zero China connection at better prices.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.